Moving picture. You're live. You're live.
Hello. Are we out there?
Yep.
Yes. Okay. Okay. My first Periscope. Well, maybe the second, but my first on my own channel. Welcome, Box. You have a couple things to say. You've kind of been pushing me towards this for a long time, so.
Yeah. Let me explain why I've been after Farley to do this. He's been an advisor to me for years. He taught me a lot about the world of startup, the world of entrepreneurship, the world of investing. You know, there's all kinds of rules. There's all kinds of unwritten rules that nobody ever tells you. You know, you can talk to a dozen different venture capitalists, and no one will ever tell you how much of your company you have to give up. You know, and so finally one day, you know, we were in Malta or something, and I said, you know, would someone please tell me what's the norm? And Farley turns around and says, well, you know, you got to figure out each time you go back to the pot, you're giving up 30% of what you got. I was like, well, why doesn't anyone say that?
Right. Yeah, so the bad news about startup culture is there are no real hard and fast rules. What I would like to do with these periscopes is really start talking, opening a dialogue about how some of this stuff works. Because, as you say, the unwritten rules are the hardest part about how this works. I've been doing it for 25 years now, and I still shake my head half the time when I try to discuss with early stage guys, with first time entrepreneurs, you know, what do you need to do? How do you want to do it? They ask me questions, and I can tell them, look, there's some answers, but again, the bad news is it's always different. You don't know from one investor to another. And there's also several different types of investors. You know, we have everything from the Y Combinators, the accelerators, the incubators, and the government funded that are doing an okay job of putting money out there and opportunities for people to be able to go to a place, to actually work with 2 or 3 founders, have free internet, free desks, all the stuff they need to sort of work on a company. But then when you're actually getting started, you know, you need real money. So what does that mean? You know, you have angel investors, you have friends and family investors, lots of different kind of things. As you progress, you have venture capital, you have corporate venture capital, and, you know, as you get even bigger, you have private equity. And then with the case of what you're doing, crowdfunding has become a huge, like, new option that didn't exist a few years ago, and makes it much easier for things that are not typically scalable in the terms of VC wants. Hardware now is popular, and you guys are doing Alt Hero, all these great things. Crowdfunding, it's a good thing, but it's totally new. So the rules are changing, and it's really hard to know where to go, what to do, how to do it. So I'm hoping that I can start answering some of these questions, that we can do some good stuff here. And hey, I'm new at it. I know what to tell you, I just don't know necessarily how to do it. So here we go.
Well, the first question that, you know, occurred to me back years ago when I first got into the you know, world of tech investment and whatnot is, you know, roughly what percentage of startup companies ever get any funding? most of them don't. So how many of them ever do?
Well, so what's kind of changed things, a lot of countries now. So I'm living near Barcelona, and whether it's Barcelona, Stockholm, Silicon Valley, it doesn't matter where in the world you are, a lot of places are starting to put money into things that you're hearing about. I'm sure accelerators, incubators, all of this. So, okay, personally,
But it seems like to me. I mean, I've talked to some of these folks,
sure.
and it seems to me like half of them seem to think that their business is not giving people money. That it seems like they hang on to it as desperately as they can, and then finally, when somebody puts some pressure on them to actually do something, then maybe they'll invest in something. Is that a misconception, or is that something that does happen? I mean, you know who I'm talking about.
Yeah, so, okay, just backing up a little bit, I mean, these accelerators and
actually, here's a good
incubators.
question. Why don't you explain what an incubator and an accelerator are?
Okay, so this is a place where okay, the point I'm trying to get at here, incubators and accelerators, in a way, they are government programs that are trying to make you think that, hey, I want to be an entrepreneur, and I will accept not getting paid any money, maybe living in my parents' basement, because I think someday I'm going to make it big. So all of these countries, like Spain where I live, are so happy to support these things because it makes these young people forget that, I really should get paid. I should get a real job.
So these incubators are full of young startup guys who essentially are not getting paid. They're just getting a little bit of office space. Or
They
what
have great hopes. They get office space. They get internet, and they get the opportunity to network. Which, okay, I'm actually kind of a professional networker. I think it's very important to do this sort of thing, but you have to remember, at the end of the day, we all want to make money. We want to build something, and we don't want other people to take what we're doing, to take our work, our time, or whatever, just because they can. So
what does the incubator get out of it? Do they get a piece of the companies that launch there, or?
Well, so this is also an important thing. There are hundreds of different incubators out there. Some of them are, the ones that are government funded often don't get anything, and they're okay, except that a lot of stuff doesn't actually happen there because they're government. The good part about it is, they give you the space, they let you basically have a free office. And there are sometimes other smart people there. That's good. But there's a lot of incubators and accelerators that say, okay, we're going to help you. We're a private company, and we're going to give you $50,000, and we're going to help you somehow to do what you can't do, and you're going to have to give us 10, 20, 30% of your company. Those are the guys I would generally say stay away from. They're tough.
So the universities are doing something similar, calling them makerspace.
So, yes, the universities, in a way, they're kind of like government usually, because they're not going to ask for a big piece of equity. Maybe they won't ask for anything because they want their university to get the benefit of incubating, helping to launch great companies. So that gives them something that they can brag about. I went to Berkeley myself. Berkeley has started to really push this kind of thing. And now there's even students who are starting funds at Berkeley. So, again, there's a lot that we can talk about, and I want to start getting a little bit more, really talking about each stage. And, we're launching now. I'm trying to figure out how this is going to work for me, how I can talk to you about it. I'm going to start putting together maybe a couple of times a week where we talk about piece by piece by piece. And it really helps me if you guys can ask questions about what you don't understand and what you would like to hear more about. Again, I'm new at this, and I'm looking forward to telling you about it because I talk about it every day, but not in this form. This is brand new. So
yeah, you have to understand that usually when Farley is sitting here talking to someone in front of people,
having a glass of wine, and
he's usually sitting in front of like 500 people with like somebody who's like a vice president of Intel in charge of business development. So this is definitely a new experience for him, and I think it's going to be a very interesting experiment as it evolves. Simply because Periscope is not fundamentally designed for education, but that's exactly what is happening here. Another question that I had when I was first getting started with startups is, what are the three most important factors that, say, a angel investment is looking for versus a VC? What's the difference in terms? We know what the difference is. Just so you're clear, an angel investor is a wealthy individual or a company that gives a small startup company its first investment. And they tend to have a different perspective than the venture capitalists, which are professional firms that see tons of companies every day and are considering who they're going to invest in. Actually, that's another question too. How many companies a year does a venture capitalist usually invest in?
Well, okay, so that totally depends on the size of their fund. And different size VCs, they might raise a fund of 50 million, 100 million. In the case of SoftBank, a big Japanese fund, they raise something like 10 billion. It's like crazy.
And then they go spend it all on Minecraft.
Yeah. So there's really funny stuff going on in the venture world because you have some great firms that we see at my conferences year after year that have funds between, say, 50 million and 500 million. And those are the ones that I think are pretty serious. Yeah, you're probably right. And then, we talked about the angel stuff where you're talking about 100,000, 200,000, 500,000. So what they're looking for is so much different. And the VCs, so for those of you who know what a venture capitalist is, these guys, even though I work with them a lot, they are sort of my friends. They're the people who, help me do my business. They are the most expensive money that you will ever take. So if you are launching a business and you're starting out, what you really want to do is find your first couple $100,000, euros, whatever, of investment from your friends and family, people you know, as well as getting money from the business itself, organic, selling the product, getting money coming in. VCs are going to come in and say to you, hey, we think your business is great, but we need at least a 10x return on our money. So if we give you $1 million, that means we want at least 10 million back. And what we'd really like is 100 million back. So there's not a lot of businesses that can actually do that. So software, services, those kinds of things, it can work. But typically hardware, alt hero comic kind of stuff, people don't know that they can get 10 times or 50 times their investment back. So the VCs, they just don't get that stuff.
Yeah, also they really don't like anything that is related to having to have a hit. So that's why you don't see them getting involved in books and games. You know, they got excited about games back when World of Warcraft came out. And I actually got hired by some of the VCs that were at Farley's conferences, and basically asked to look at different games and give them a professional opinion of whether it was going to get finished on time, all that kind of stuff. But at the end of the day, virtually none of them ever invested in anything. It just wasn't a it wasn't something that they were fundamentally going to do, even though they were seduced by initially seduced by the idea of making Blizzard kind of money.
Right. So I just saw a comment come in about doing something like a walkthrough Wednesdays. And yeah, that's kind of what I have in mind, that we do some sort of regular talk about how things work, how things start, the different levels. I mean, there's at least 6, 7, 8 different types of funding. And then, as you guys have questions, I can start to talk more and more about each level, how it works, and how to get there. And what we do with my company, White Bull, is we help entrepreneurs to connect with investors and teach them, how they need to position themselves when they actually start talking to these investors. Because you can't just say, knock on the door, please give me money. There's a lot of things that you need to do just to make sure you get in front of the right ones. And okay, so I see, do angel investors typically act as mentors? Yes. In fact, if your angel doesn't... Okay,
so get into the picture there.
There's maybe 2 ways to look at an angel. Some people want smart money, some people want dumb money. If I'm a first-time entrepreneur, I probably want smart money. That means I want somebody who can help mentor me, point me in the right direction, help me to find the right people, whether that's customers. You put together things like advisory boards that help you find customers, that help you find other investors. So yes, you need mentors at the beginning. Maybe if you're a 3rd or 4th time entrepreneur, have had a few exits, it's not quite as important to have that. But in the beginning, absolutely yes.
I think that's a pretty good summary for a first Periscope. Well, thanks for tuning in, everybody. I'm here for a
Bronson types. What's that?
Are you talking like Death Wish? Death Wish?
Charles Bronson? Yeah. Well, sorry.
Yeah, we'll probably do this at least one more time while I'm still here, and then Farley will be on his own. So, Bronson, the Virgin guy.
Branson.
Branson, yeah, okay. But he's not really he's more of the guy that the VCs try to sell to, isn't he?
He's got all kinds of hair. Yeah, well, so Branson has an early stage venture fund.
Oh, he does, okay.
And he does late stage stuff. I mean, he's a master. He's done very well. He works on every level because he's got billions of dollars now that he can work with.
Right.
So if you can get to him, great. And we'll talk about that. I've read many of his books. I'd love to even do a Periscope about him in particular. We will, I promise.
Okay. Just tap it to...
All right, guys. Thanks.
And then one more time. There. Oh.